And now let's talk about Twitter, trade in Twitter. So this trade had a little bit of the emotional memory for me. I actually traded Twitter before, and unsuccessfully. It seemed like every time I would get into the position, there would be some kind of counter reaction that was significant that pushed me away from that trade. One of the latest trades that I've had was in this area right here. I was looking at the decrease in volatility going to the levels of the support in what seemed at that time a potential phase C. A really good rally to the upside with the increase in effort and increase in result and touching the previous intermediate resistance at this point, and a really good reaction with the test as a higher low, and supply seems to be okay. I'm not necessarily seeing a lot of decrease in the supply, but it was at the average level and it was manageable. So coming into this position right here and expecting that the earnings might produce some kind of change in sentiment, that was the intention for the trade. The price just touched the resistance that was the long-term resistance from the automatic rally and bounced just off that and came back into the trading range significantly on earnings. So that was a losing trade. So I was approaching the next trade very cautiously. I did not want to have a loss in this particular stock. I wanted to get the monkey off my back in terms of putting on a good trade and just taking that emotional pain from the previous losses away. And it's kind of important sometimes, to do that because some of the instruments are going to have that emotional connotation for you guys. And I think it's okay. It's just that you have to become aware of those emotional knots and just try to release them. And however you do this, it doesn't really matter. You just need to do it. So coming into this trade, I'm looking at the potential long-term phase C as a last point of support. And my observation around the price action and the volume action are very bullish at this point of time. On the very short-term basis, the price is making higher highs, higher lows, and we kind of in this feather type of formation where there is a contraction of the supply over the previous area where we see that reaction actually slightly has a high supply. In this second instance, we're probably looking at the smaller level of the supply there overall. We see the contraction, the decrease of the supply. So we're expecting that the next rally is going to be probably of a better quality. And the next rally comes with a lot of momentum on effort that is increasing significantly. And we could use different analogs right here where we are just comparing the jumps off the lows in different areas, like right here off the support and off this support. And because the quality is somewhat different of the supply in this area, we're definitely looking at a potential rally that's going to overcome a point of resistance that was created before. And that's exactly what happens. Now, on this rally, we still have a relatively high supply. That supply comes in at a very high level and suggests some kind of stopping action, a reversal or a change of character, and that's exactly what happens. We have a reaction, so we need to make an assessment now of this reaction before we take on the position. Is this the reaction that would confirm the quality of the absorption of the supply that has happened in phase C and the quality of the rally of that absorption area? And we're seeing that the reaction which was ABC or 1, 2, 3 type of reaction is definitely much better than anything that we've seen before from the perspective of where it actually rests. Every time the price would hit a level of the resistance, there would be some kind of reaction that would have a signature of the increase in supply, or if it's going to be a high or low, we're seeing that the price went into approximately maybe like even below the 1/2 of the whole range, or just gaps down like this in some of the cases. So this is a different quality of the reaction from anything that we've seen before. It suggests that the price has more resistance to go down, even though it seems that supply has come on this jump to the upside on overcoming the resistance. Supply was still available on the first test, but contracted throughout this whole formation. And the result of it was inability to come back into the range significantly. And that's the biggest difference right there. So we have this sequence of absorption, and this absorption has happened at a slightly higher level at about 1/2 of the height of the range. Secondly, we have a much better rally that overcomes for the first time the long-term resistance from the automatic rally. And then we have a reaction that has a different quality to it, diminishing supply and the diminishing result to the downside. Also structurally, I really like when this type of reaction produces higher high and higher low. That just structurally tells me that there is a lot of strength behind this reaction. So this is where we are at the beginning of this trade, and our first position just opened on the reversal of that last test of the previous low. And we are thinking that we are probably in potential phase D. So let's think about what kind of targets we potentially could have here. Let's refer to the weekly chart right here. So since the downtrend, we have the break of the trend, and then a very clearly defined change of character relative to the last move to the downside that suggests a trading range. A test of that climactic action, and that concludes phase A, stopping action. An upthrust action in phase B, kind of like very typical definitional upthrust where there is a temporary commitment to the upside and almost instant return back into the trading range. A test in phase B, and then a higher test of phase C. Now, phase C definition here is based on the second point of fear that we could observe here on the third test. Those are all definitions from advanced Wyckoff course. You would have to refer to that particular material, if you want to identify phase C more accurately. But the position of phase C and the last point of support that it presents and the final absorption of whatever supply was available at that point, specifically from this gap in action to the downside right here, is much more favorable than anything that we've seen before. So we're expecting the rally. Here is this rally. It commits above the automatic rally high, which is a really positive sign, and then rests on this long-term resistance line that I mentioned before. So what are our targets? We definitely want to understand where the selling has come before. And we're seeing that the selling has come at around 3 places that we could identify. So we have our target number 1, target number 2, target number 3, and obviously we want to see that progression of the price being kind of like drawn to some kind of magnet event, maybe some earnings or something like that, and we want the price to jump or to travel, to rally, to all of these targets, preferably, obviously, to target number 3, which is around $35. All right, so let's look at the trade. This is what happened. So here's our first point of entry. We are adding on to the position as the price travels up. We also add in after the next rally. We see the commitment to the upside, and that commitment has a more localized increase in effort. So we basically have increase in effort, increase in the result, which is bullish, short-term bullish. So we're expecting a continuation after some kind of reaction. Reaction comes, the next add-on right here, and then what happens here in this smaller range is very interesting because we have an intermediate buying climax, and then we have an upthrust situation on this bar. This is where effort also has increased, but look at the result. If the intention behind this bar was to commit above this level of the resistance from the climactic action, are we really doing this? Are we closing above it? No. So result is less. So that suggests some kind of short-term reaction, and we are going into a short-term bearish bias on this particular upthrust. So we're expecting the reaction, and probably the most uncomfortable area for this trade was this reaction right here. And one of the things that helped me out, actually a couple of things that helped me out here to stay in this position is just the definition of the longer term trend. So at the time I had my lines like this. So I was expecting that we're probably going to come into this area right here. And then also the character with which the reaction was going down. We definitely have some selling both on the upthrust bar and on the next bar. So these are the sells that we see from the professionals. And then after that, supply is contracting. It's still there. It's still at the relatively higher level, higher than anything that we've seen in this area right here. So we're anticipating that maybe we're going to have a more meaningful reaction than anything of this sort. And indeed, we do. But then subsequently, as the reaction develops, in the latest portion of this reaction, we see that the effort is starting to increase, and yet the spread is starting to decrease. And the spread is a function of the result, so we would say that the result is starting to decrease. So we're trying to push the price down with more effort, slightly more effort than let's say in the middle of this move and somewhat equal to the beginning of this move, and yet maybe result is somewhat less. So, and that's what kept me in this position. So that suggested some kind of possible reversal, stop in action, change of character, which comes on this big bar, and that was a confirmation that indeed, staying in this position was a correct decision. And everything else before the earnings on the pre-earnings run actually suggests that we're going to have a possibly really good earnings, and the reaction to the earnings also could be quite favorable. And the only difficulty here probably was this reaction. But even with this reaction, studying the effort versus the result, we see how some selling is coming in, but yet what is the result of all of this selling? What is the result of this increased effort signature? And we see how, again, on the last bar, we're closing almost at the level of the climactic action. So we wanted to go lower on the intraday basis, and then we were bought in and brought in back to the same level, which is a very bullish sign. So you still have to stay in this position and go through the earnings. And then obviously earnings themselves produce a very favorable gap for us. I believe that it gapped around 25% at the open. And as I'm watching the open on the 1 minute and 5 minute chart, I'm seeing a reversal. I'm seeing that the supply is actually coming in heavy. So I know that professionals are doing their mean reversion trade, at least setting it up, because the price has deviated from the mean quite significantly. And we definitely could expect that there's going to be some kind of selling pressure on that particular day. Also, our target number 3, not 1, not 2, but target number 3 has been reached on that gap, and we are thinking that it's definitely a really good place for us to either exit the position or to scale out in a significant way. And I usually trade options directionally. So my expiration on that particular options was in March. So this presents a really efficient point of exit for me. If supply is coming in, I'm thinking that maybe we're going to have a reaction. Maybe we're going to have some kind of trading range, consolidating action, and that's going to eat up my time premium. And I really don't want to do this. I want to get out at the kind of like the point of excitement and at the point where my price premium and my time premium has the highest point of profitability. So my decision is very easy here. I'm just getting out of this position. I actually got out really nicely at 34 and a half, so 50 cents off the top, and just basically use the intraday reversal to close out this position. I believe that the price made this high right here and then kind of like drifted lower and then had a big bar around this area, and I believe that the price right now is around 30 to 29. So from that perspective, now looking back a little bit in hindsight, what has happened after the exit, it probably was the most efficient exit. Any other thoughts here? Probably that's it. I really like how the effort increased here and how that produced a more significant result actually on this reaction right here. My thoughts were that there's going to be a continuation. I did not open the position here, although it was a test of the test. So quite favorable structural spot to open additional position. Probably that trade would result in just a small win or a break even or a small loss even. And that wouldn't be the efficient, but I think that that was relatively good trade considering all of the circumstances, especially some of the reactions that we've experienced on the way up, which were slightly difficult, to go through.